Well, World Football governing body FIFA is facing growing objection to its plan to sell stakes to external investors in a subsidiary that will manage its tournaments. European football, governed by UEFA, has vowed to boycott all FIFA competitions, including the World Cup, in protest. Now, the decision was unanimous among its 55 members during an emergency meeting. UEFA reiterates the World Cup is not for sale and cannot be treated as an investment product. It calls the plan irresponsible and indefensible. UEFA decried the so-called democratic plan put forth by FIFA President Gianni Infantino and described it as governance by intimidation. The English Football Association backed UEFA and reaffirmed support for its European colleagues. All 41 members of CONCACAF, which is in charge of football in North and Central America and the Caribbean, also rejected FIFA's proposal. Now, it questioned the need for private investment following this year's most profitable World Cup in history. And like the Asian Football Confederation, both CONCACAF and UEFA strongly criticized FIFA for not consulting them in the process. Opposition to the plan will be tested in September when FIFA's next event, the Women's Under-20 World Cup, is held in Poland. The next senior tournament is in October, with playoffs for the 2027 Women's World Cup. And FIFA announced plans earlier this week to create a $20 billion subsidiary to run its main events. External investors can buy stakes of up to 20%. The core investor of the so-called FIFA Forward enterprise would be a U.S. investment firm created by Joshua Kushner. He's the brother of Jared Kushner, son-in-law of U.S. President Donald Trump. A key lure for member associations, $20 million in annual funds for the next 4 years if they back the controversial plan by mid-September. Now, that's double their promised funding. The plan will need to be approved by more than half of FIFA's 211 members in order to pass. And two other continental federations have scheduled meetings to evaluate the stake sale plan. The body that oversees South American football has yet to respond. And for more on this, we are now going to speak to Victor Matheson, Professor of Economics at the College of the Holy Cross. Professor, thank you so much for joining us. Hot topic here. FIFA has just delivered its most profitable World Cup. So from a sports economist kind of perspective, does this really genuinely need private capital, or is this just an attempt to further monetize an already hugely profitable asset?
What's most important here is it's an attempt for current leadership to gain the most money it can right now at the expense of future revenues of FIFA. Because remember, what a privatization does is it gives the current leadership, both at FIFA and at national organizations around the world, a bunch of cash right now. And what you lose is the profits from future events that happen to future leaders. So it's a way to basically take money from the future, bring it now, and take power from soccer leaders in the future and hand that to current leadership in FIFA and again in national federations around the world right now.
And what economic incentives make this proposal attractive to FIFA beyond just simply, raising more money?
So I think, again, what makes it attractive to FIFA is a different thing that makes it attractive to the current leadership in FIFA. Again, the current leadership in FIFA like this plan a lot because it hands them a lot of money now rather than having to wait for money to appear from future World Cups after the current leadership may be out of office. So I don't think this is something that should be attractive to FIFA as an organization, but certain individuals who are currently in charge of FIFA can monetize their current position and again essentially take money from future leadership so that they can use it today.
Okay. And is the World Cup, undervalued as a commercial asset? And perhaps what value might outside investors really believe FIFA is failing to capture?
So I think the real issue is that if you bring outside investors in, then the focus of FIFA becomes all about generating revenue. In theory, FIFA isn't a profit maximizing organization. In fact, it's actually a nonprofit. It's a charity. And its goal is to maximize the well-being of soccer worldwide. This means investing in grassroots soccer, investing in women's soccer, investing money in underdeveloped soccer countries like China, like India, for example. But if you have outside investors, the pressure may be to make sure that FIFA's main goal is to maximize the amount of money their events are making at the expense of the other things that theoretically FIFA is actually supposed to be doing.
Professor, if Europe and maybe the CONCACAF and AFF countries ultimately really stayed away from FIFA competitions, how quickly would that really reduce the value of the World Cup for broadcasters, sponsors, and even investors?
Without Europe and also without the United States, the World Cup is not a valuable product at all. Remember, the vast majority of viewers do take place, especially viewers with a lot of money that generate high advertising revenue. Those are in the United States. Those are in Europe. On top of that, the soccer powerhouses are also there. Remember, 6 of the 8 quarterfinalists in the last World Cup were from Europe. On top of this, what's extremely important and probably even the bigger threat than saying European countries won't participate, one of the things that UEFA does and what the World Cup does, because they are working together, is there's an agreement that European professional soccer clubs are bound to release any of their players to play in the World Cup. So, for example, if you are an African or a South American player playing for a European professional club, that club has to release you for the World Cup. So it's not just about losing all of the European teams, it's also about losing every other player in the world who plays for a European team, and that's about 90% of the top players in the world. So if Europe says, no, we're not going along with FIFA for the World Cup, that basically ends the World Cup as an actual competition. It's certainly no longer a World Cup.
Smaller football nations may see significant funding gains from the proposal. 20 billion US dollars. It's a big amount. Does that really create a genuine development opportunity or a financial dependency on FIFA?
Again, this isn't about getting more money from FIFA over time. It's about getting more money from FIFA right now. So yes, I think this is very attractive to national organizations and individuals within these national organizations. It is a way to get money now, but it comes at a cost. It means more money now, but less money in the future. That's a good deal if you're currently the president of a small country or small country's soccer organization. It's not necessarily a good deal for the actual development of soccer or football in small countries or large countries.
Well, thank you so much for sharing your insights with us. We were speaking to Victor Matheson, Professor of Economics at the College of the Holy Cross.